Hey everyone, this is Otsukimi here, and this is backtest number 3 for the Apex Classic Indicator. As you guys may know, I've been backtesting a script called the Apex Indicator. I have two of these, in fact. I have Apex Classic and Apex Pro, and they are packaged together as both a lifetime one-time payment option and a 4-month payment option, and both of these are for lifetime access. You get these for as long as they are available. They will get regular updates, but they don't really need to have updates as much per se because that's what the back tests are for. And so most of the updates are going to be visual or what have you, So what am I doing here? Uh, First of all, I'm doing a series of back tests, and so with this, you are getting about an hour roughly for each back test. This is going to be number 4. So I've already done 3 hours worth of open-ended back testing, which means I've recorded these live. They have been lightly edited just to remove some stuttering or like long breaks because I leave the mic open. This is a hot mic. I just leave it open. I'll mute it if I need to sneeze or what have you, take a drink of water, or to take maybe a 5 minute break. But everything else is recorded live, and the idea is to show you that I'm not fibbing anything here. I'm not modifying any data. These are not repainted. This is nothing like this. This is true, um, true as they can be, evidence that these scripts are valid. And so I've been back testing them on different time frames. This video is going to cover the 15-minute and the 5-minute time frames for Bitcoin. I've the first three. Um, the first one was covering the 1 day, 12-hour um, time frames on Bitcoin. I think video two, I get video 2 and 3 mixed up right now, but one of them was based off the 4 hour and 1 hour. And then the other one was actually my Aron trend script, which is a second script. So with this video, I'm going to have the Apex Classic Indicator back tested on the 1 day, 12-hour, 4 hour, 1 hour, 15-minute, and 5-minute. So it's pretty comprehensive, and I can already tell you the first 3 videos I've done is more than anybody else that has ever back tested a script. Okay, and that's part of my intention. You get a lot of people out there that want you to buy scripts. There's nothing wrong with that, but they hide all the data. They don't tell you what it's about. They don't tell you what's involved with it. I tell you what mine's is based off of my Apex Academy rundown, and that's something I mentioned in the first video, so you can go back and check that out. Um, I might be able to explain it again. It doesn't matter to me, but I've done due diligence to share with you, like this is worth the money that I'm asking, and not only that, this is more of something that has like people have approached me to like, hey, like we see your script. Is it something that we can purchase? And I thought it through, and yes, I went ahead and decided to do that. And so it is a higher price. It is $740. So that is a little higher for some people, and that's okay. I'm okay with that because I'm here to show you what's involved with it. Okay, and so nobody would be doing this unless you know maybe it's worth 740. So anyway, I'm trying to stay humble with this process as I share you confidently about this script. So I'm trying to um, straddle that line, so to speak. So anyway, what this is going to do, and so I'll do a rundown of this. Again, this is going to be continuous video. This is meant for you to skim through. I'll try to do timestamps, but overall, I'm just going to keep it running. And so we are going to do 40 trades total. And what we're going to do is we're going to take 10 dates at random on the 15-minute and the 5-minute chart. Now, there may be some restrictions on TradingView. I'm going to see how that goes. One reason why my third indicator, my liquidity indicator, had some issues with TradingView not allowing me to go back as far as I can. And so we'll see how this goes. As far as the I would like to back test this as far as I can. I think for the time being, I think I'll cover like just 2020 to current. I think that's I'll see if I can do more than that. But the reason I say 2020 to current, like January 1st, 2020 to current day, is because It's almost the end of the year, so that gives us 3 solid years to work with, and that gives us also a full cycle to work with. So you should get comparable data for all of that. And we'll see if I can go farther. It will depend on what TradingView will allow me to do, because it's also hard for me to scroll on a 5 minute chart back 3 years. So we'll see how that goes. And again, anything that any of these trades, if there's something like a gray area, I always give it the benefit of the doubt that you are either going to not make that money. Like I'm gonna have it favor against the trader, and I do that on purpose because I want to. I kind of want to undersell this in a little bit because I want to give you conservative estimates on its performance. Okay, I don't want to exacerbate the performance on this. A lot of people, I've seen multiple people do this where they try to sell scripts and they sell it for thousands of percent. Like I know a guy I'm thinking of right now, and I wish I could say the name. I really really do. I want to, but I'm going to for the better integrity of my brand and everything else. I'm not going to do it. But this particular guy, he bragged about his script, and with the first, and it was one of those integral like integrated trading, like you had to sign up on his ref link, and you actually gave him X, like you actually gave him the money, so to speak, or gave him control of your money on the portfolio. And people lost like 30% in 1 month, and so it's my script shouldn't do that. Like nobody's script should do that. Okay, so and so he got a lot of flack for that, and he actually gave up, and now he's hiding under more influential people, and so he doesn't really do a lot in the space anymore. He's still around, but he doesn't do a lot. But he's kind of hiding amongst the crowd because um, I believe that he's a scammer, and so also a guy that I used to work with, and he wouldn't pay me, so we had to deal with all that. Um, so yeah, I want to take the high road with this and say, all right, I'm giving you these trades, and so what we're gonna do is we're gonna do 10 dates on the 15th. So let's say here's how this is gonna go. Let me pause this just for the timestamp. And so we're gonna go here to the 15-minute chart, and let's say I pick this date right here, November 15th. And so what I'll do is I'll put a vertical line right here, and I'll put it, just 15th, 16th, doesn't matter. And so that's the date. So we're going to do 10 of these. And we're going to do the trade on the left and the trade on the right. And so here is your positioning right here for the left side. And so as far as what the Apex script does, this this darker line, it's actually blue. You can change the color, and it might look differently depending on your um, on your screen or whatever, but this is supposed to be your entry point. The lighter one, the red one, is supposed to be your stop loss. And so that's how this is going to run. And so I'm also going to do Apex. As far as taking profits, I'm going to do what I teach in the Apex Academy, which is taking profit on weaknesses, which is divergences in particular, or oversold territory on the RSI, um, or invalidations, one of the two. And so that's how that's going to run. You can see we got a buy signal up here as well. So this trade in particular would go all the way up to right here. And so my trade entry would be 6.74R at 3.5%. And then so what I'm going to do is I'm going to check that performance as if you were buying spot. I'm also going to check the performance on the R value, which is 6.7 in this case. And then I'm also going to do a 3x performance if you're using low leverage. And so that would roughly be about 10% for this one. And so I want to keep that in mind. And so I'm doing that because some people do percentages. I personally do R values, but some people do percentages. I think I might actually increase this to even 5 or 10% leverage, because these stop losses are pretty low. Like you're not going to um, probably enter in on spot with just this low leverage. You're probably going to enter something like 50%, right, or 25%. So I'm probably going to do. I haven't quite decided what I'm going to do yet, but I think I'll do at least 10x leverage examples in addition to everything else I just said, and then I might even do 25. We'll see how that goes, because I want to make sure First of all, I hate using the idea of leverage because I don't want to encourage high leverage. Okay, so keep that in mind. I'm not here to tell you that you should 20x or 100x because it's not for everyone. So anyway, that's going to be that's this long signal here, and then I'm going to do the one on the right as well. So if I do this date, do the one on the left, do the one on the right, and so this is where that will work out. And so I'll have again, about half stop on this, and then we'll do um, I would have stopped probably right here or on the divergence. So we would have went something like so, which would have been about a 4.3R or at 2% plus the leverage incorporated into that. I think I probably would have stopped here if I'm being honest. So I'm going to go ahead and do that 4.58. And so let me get my calculator and figure this out for you. So 6.74 plus 4.58 would have been 11.32R. So you would have gained over 11R with just these two trades alone. And then I'm going to do that 10 times, right? And so this was at 3.5%, 3.56, and then plus 1.91. And then if we times that by 50, let's say, you would have gained 273%. Now, again, that's a caveat with the leverage, right? But 273 on two trades is relatively good. So, and again, I'm not here to tell you that this is good. I'm not here to try to say, hey, this is the best script ever. I'm going to charge $20,000 and this you take it or leave it. That's not what I'm saying, right? So I don't necessarily know the performance like I do from other backtesting, but not in this particular case because this is live. And so I'm going to give you a live outlook, and then just kind of share the data afterwards. And so the pricing for this was $740, and that pricing is based off of the 1 day trading average. Okay, and I can kind of look at that here. So this was the spreadsheet, and so here you go. Here's your Apex Classic. It gave us 48.9R for the 1 day. And then on the 12 hour, it gave us some more. So with this, it gave us 108% at basically 42R for the 1 day, with an extra, 0.31. For some reason, it was heavily shifted to the left for some reason. Um, but we had the 42R plus the 6.9R plus the 12 and plus the 26 roughly for the 12 hour. And so we got the averages for this right here. And so this is the layout. This is gonna be the summary sheet, so to speak. And so I'm gonna have a Bitcoin test. I'm also gonna do an Ethereum test, and then I'm also gonna do random altcoins. So because people are gonna trade more than just Bitcoin, Ethereum. So we'll take a look at this, right? So overall, this was your performance backtest for the 1 day with the 1x performance, the 3x performance, so forth, so on and so forth. For the 12 hour, 15 hour, I'm going to do even higher leverage just to show you that comparison. So anyway, that's pretty much the preliminary things. What I'm going to do also is I'm going to go to random.org and look up the random dates. And I think I got to pause the video to set this up, but I'm going to keep re-rolling it to show you that it is, in fact, valid dates. Unless I could just find it here. Numbers, games, drawings, tools, statistics. I gotta Google it, I think, and that's because I don't know actually where to go. Maybe it's right there, but we'll take a look at that and see. But anyway, this is the setup that we're gonna go with. We're gonna do it 10 times. I'm gonna set this up on the spreadsheet, and then we'll go from there. I'm gonna take a small pause for water break and various things. So I might edit that out, but I'm just gonna keep running with this and keep the video rolling. All right, so I took a little bit of a break. I might take another one about 10 minutes because I actually might have to take more breaks or whatever. So anyway, what we're gonna do is we're gonna get rid of all this because I showed you the examples of that, and then I went ahead. I'll show you what I did. I just added the extra performance here. I'm not gonna compute the 10x and 25x on the 1 day and 12 hour, because that's probably going to be there's a chance that those could have been liquidated, and I don't know, and I would have to look at 3 more hours of data just to figure that out. So I'm not going to do that. What I will do is I might fill out the 10x on this one, and then go ahead and do the 25x and I might even do 50x. We'll see. You know what? I think I'll just add it here because again, I'm not saying this to. Sorry, I'm not saying this to try to inflate anything. That's not what I'm doing. The thing is you are going to probably use 25x on the 5 minute chart, for example, roughly. And I'm not suggesting it. And I'm going to put a disclaimer on this video in the front of it that this is not financial advice. I'm just giving you comparable data based off of somebody's real world use. So we'll see how this goes. And so I'll fill in the rest of these for the 1 day to the 1 hour later. For this video, we will do the 15 minute and the 5 minute. So I'm gonna go shift to this tab, and so I'm gonna do 10 dates here, and I'm gonna do 10 dates here. And so what happens is if I have to, if I have to, let's say I get November 15th, and then the other one's like November 16th. Well, then I'm gonna re-roll that, so to speak. So I'll leave it blank and I'll add it later, and I'll do it within this video. So that's going to be something that we're working with. So we're going to do the 15 minute left to right, 5 minute left and right. So, and I'm sorry if I pause for a couple seconds here or there. It might have to be because I'm coughing, sneezing, whatever. So you just have to get used to it. And again, this is meant to skim, look at the process, look at the validity, the transparency of it, and then use that hopefully as a catalyst to say, hey, Otsukimi is being legitimate with his approach toward the script, and my goal is for you to buy the script, if you think it will benefit you, and that's all I'm trying to do here. So and the thing is, people in the crypto space are complaining about a lack of transparency and honesty. Okay, I'm being transparent and honest here. That is my goal for this video. Okay, so if anything, please take note of that, right? I'm trying to give you all the credibility that I can give you. Okay, so I hope that that resonates with some people, gets them to look at my script perhaps. If it works for them, great. If it doesn't, that's okay too. Okay, I'm not here to, I'm just here just to be as transparent as I can be. So hopefully that helps you. But we're going to go ahead and go to the randomizer. And so I went ahead and did all this. Let me pause for a second. All right, excuse me. So with this random date generator, so what we're going to do is I can pick the number of dates. So what I'm going to do is pick 10. And I love this site actually. Pick 10 total dates. And so I think I'll do, honestly, I think January, I think I'm just going to go with January um, 1st of 2020. And let me know if you just think that that's not good enough. But again, the thing is when I'm dealing with 15 minute and 5 minute charts, that's a lot of scrolling. And I feel like January 1st is a good date because that helps us look at like an entire cycle. And so what we'll do is we'll do what is today's date? Today is the 16th, so I'll do the 15th of November 2023. So that's yesterday for me. So that gives us pretty much almost every single date between the last 2 years. So I'm going to go ahead and include weekends on this. In the date format, I'm going to do the American format for me, just to make it easier for me to read. And so here it is. Step forward, be patient, go. So we're going to get the dates. And so this is the dates. And so to let you know that this is random, I'm just going to keep doing this. And so these are the dates that I'm working with. And so I'm going to go ahead and click one more time. And these are the dates that I'm going to work with. And so I'm going to hit copy because I found out that I can actually copy this. And then just paste it right there. And so that's what we got to work with. And so not sure what that was, so we're going to fill that back in. And so I'm going to go ahead and do the same thing again. Re-roll it. And then add it to the 5 minute. So now we got our dates. We got our dates to work with. I'm going to go ahead and just stylize this a little bit better. This, I think it's the green that I was looking for. So, and again, I know I've been doing a lot of Bitcoin, so we're going to do the next time is do Ethereum, and then after that, do a lot of altcoins along with that. So, um, sorry, just checking. Apologies, I'm just checking some messages, but I should probably mute next time, so I apologize. Let's see. So, let me mute and get this sorted out. All right, so what we got here is we got our dates, and so what I'm going to do is just looks like the market's doing pretty good. We'll see if this, it's we're only like 2 hours into the opening, so we'll see what happens. So I'm gonna go ahead and just shift this over, make it easier for my excuse me, for my back testing, going back and forth on the tabs. So first things first, January 30th, 2020. You know what? I think I'll work backwards because I can scroll. I just realized that I can scroll backwards much more efficiently that way. Another thing I'm going to do is I'm going to delete this, and then I will do. I'm just going to fill out the sum. So I don't know why it won't let me. Was it? Hold on a second. All right, that took way too long, and that's a little embarrassing. So let's go ahead and just work with this. So I know I'm going to take a break here in about 5 minutes, or maybe 10 or 15. So let's go ahead and do a few of these here. Again, I'm going to work my way backwards. Kind of do kind of structure this like so. So the first thing is going to be July 27th, 2023. So we're going to do. Did I do the 15-minute first? Can't even look. Yeah, 15-minute. So July 27th, 2023. All right, so let's go here. July 27th, 2023. And so something like this doesn't necessarily mean it's going to be bad or good. It's just how it looks like zoomed out. And so August, July 27th. So let's go here. And so what I'll do is probably at the top of the hour, I think will be the best option. So July 27th. So right here. And so that's what we're going to be working with. And so maybe I think I'll do the first and the last. I think that'd be so like the 0 hour, 24 hour. I think that'll work fine. So let's go ahead and do. So this is like the 27th, right? And so we'll do between this 27th and the 28th. And so this will be the first one, and then this will be the next one. And so with this, we can do a long position here, and I can already tell this is going to get stopped out. And then so actually, it would not have been stopped out, would it have? That's so dang close, but that did not get stopped out. That's really crazy. So what we're going to do here is, did I get a divergence? It looks like I did not. Nothing like that. No oversold territory. So I would have sold it here. I would have sold it anyway for a small loss. Let's say about 1/3 loss. So, all right. So we're going to put that down. And so the percentage value. So this would have been minus 0.33. And then that would have been, what's 0.19? Like point 0.6? That's like really low. So minus 0.6 percent. No. What do we got here? Yeah, it would have been 0.6. So very small, very, very small. So, and then 15-minute on the right side would have been right here. So that would have been a short. And so this would work out pretty well, it looks like. We'll see. And so do I go below Um, so let's see, no divergence necessarily. Is there divergence? No divergence. Let's see. But I would have sold at the 20, below the 25 marker. That's my apex rule. So that would have been right here. And so that would have been 4.94 at 94% or 0.94%. So 0.94 at, what was that? 4.94. So doing okay so far. So we'll go ahead and continue, and we'll go to um, December 27th, 2022. Let's check my messages here. All right, so what did I say? September 27th? Wait. Okay, yeah, that's a whole year. That's what I was thinking. Like, why would it be the other one? So, all right, December 27th. We'll see how far I can go with this. There we go. So that's the issue that I ran into before. So I'd have to have a quote unquote professional plan, which is a lot. It's like thousands of dollars a month. So it was April 2023. So we're gonna have to redo this and start with April 2023, which is kind of sucky, but we'll just go with this. So we're gonna do nine. We already did one, so we're gonna do nine between April. Um, what did I say? April 2nd. It's really dumb. April 1st. We'll do April 1st. April 2023 to today or yesterday, so 15th of November. So I hate to do that, but I don't have a choice. That's kind of what we were working with. So going ahead and go to get dates, and these are the new 9 dates that we will be working with. And so that's just how it is. So here we're going to paste. So those are our new dates. So that's what we're going to work with. Taking a small break before I begin. And that break will probably be 5 minutes. All right, so I am back. I may edit out that pause. Just a second here. So what we're going to do, what did I say? July or September? Let's keep going backwards. September 9th, 2023. Or no, we're already at the end, so let's just go backwards again. Or the proper way. I don't know. I'm all over the place. This is what you get for watching it live. So April 15th will be the first one. So April 15th. And so April 15th. So as you can kind of see, like you have a lot of trades here jumbled up when it's ranging, and you have some pretty good one when it's not. So that's just something to keep in mind. If you can correlate that with range bound versus trend bound on your analysis, you're probably going to get even better performance than when I'm mentioning. So April 15th. I just want to make sure I get this right. So April 15th. So here's the 15th marker. So that's going to be stopped out. I already know, but we're going to go ahead and do that. So this is your top of the buy. This is your sell point. And that would have been just a straight 1R loss. So that would have been -1. And then this would have been minus 0.36. So minus 0.36. Going to the right one. So this is the last trade here for the 15th. And so short position. And so that would be, would we have sold there? We would not have sold there. And so that would have been Probably would have sold up here, so that actually would have been a loss as well. So we'll do minus 7.5. So minus 7.5 at 13. So it would have been like 0.8 or 0.08. So 0.08 minus 0.08. All right, so I got to sneeze, but I'm just going to go ahead and keep it muted and just go on to the next one. So here's the 17th, and so what we're going to do, it doesn't really match, so we're just going to go ahead and go with this one. This is a very interesting. I haven't seen this before. Like, there's no trades within the 17, so I guess I'll just do the odder ones instead. Yeah, I got a sneeze coming, but man, it's like it's. You ever try to sneeze and it's not coming, and then I don't know. Like I'm gonna be waiting like 10 minutes before I finally sneeze. So let's go ahead and go here, and then so this is one of these things where you got a pretty high leverage thing. So even if you're doing like 150x, you're probably not going to be trading this tight of a stop. So let me see. I think I'll just keep it like it is and just kind of work with that. Because it's not that I want to do that. It's just I don't know how to circumvent that. Excuse me. And so we're just going to work this out like so. Now, the thing with this is, according to my Apex strategy, I would have gotten out below this marker. So, um, yeah, I would have gotten out right at this candle right here. Not at the very low, but I would have got out here. Now, as you can see, this would have been a very plentiful position, especially if you did a trailing stop. And so I might add that to another video, the trailing stop idea. But that's seems like I don't think I will do that, although I want to because this is very beautiful as far as this goes. Give me just a second. Okay, so I mean, I really want to, but according to my rules, I'm just going to keep it like so. So that would have been, unfortunately, a very, very modest 10.96. So we're going to do that. So 10.96, and that's pretty good because the thing is, I mean, you could have got a potential like 30, but that's the thing, like you don't know, right? And that's why I want to give more conservative estimates. You could have got out of this divergence here. That would have been a thing, and then you would have got at 27. So I want to keep that in mind. That is probably that's a very healthy trade. And so we'll just keep this running like so, and then that would have been a 1.31% move. 1.31%, and so we'll go with that one. And so going to the right side, this also would have been a pretty good one. And so you got, there's your percentage move. No, not sure if that's divergent or not, but it would have got here. Let's see, right there. Okay, so this bigger candle, but not all the way to the top, just right around there. So it would have been about 9.22. 9.22, killing it right now. And then, but that could change. So 2.61%. And like I said, these will be adjusted for leverage scenarios as well. Just a second. All right, going on to the third one, May 29th, 2023. So we're going to go ahead and go that May 29th, 2023. I guess it'll all be 2023. So May 29th is the next one. 29th. All right, so right here, so we're going to do this one. Let's see, May 29th. And we'll just do the two outer ones. And so another long position here. Going to work with this. This one, this can be very frustrating too as a trade in real life. I've done this before, and it's just like you got to wait like 2 hours, like right on the line. Like, yep, that's just how it works sometimes. So this is going to be going up to here, roughly right around. Let's see, right. I'll just give it up to the top one here. So the thing that frustrates me about this is that you got a pretty significant run to the upside here. And so again, this would be a 34R. So I want to mention that, right? Like this has an just outrageous potential with the way that you can position these, okay? So as far as adjusting for this extended move, right? That will drastically change your outcome for these results. Because right now, this is looking at 34R at 5.9%, right? According to my Apex, I'm going to be much more according to my Apex Academy rules, I'll be much more conservative about this. And I'm doing that to give you more transparency. I'm going to give you more conservative numbers to show you that's going to be possibly more realistic for some of you. And again, you would adjust according to your style. So that's just something to keep in mind. So I'm going to go ahead and go down back here and do 8.27. And so that's going to be 8.27. And then the percentage value on that was going to be 1.41. So 1.41. And so the next one is going to be, so get rid of that. Not as good, but still, we'll just see how it goes. So, we actually got a divergence here, so I would have stopped out right. Yeah, that's the first candle down, so I would have stopped out right at the bottom at 2.46. So 2.46. I'm gonna make these bolder so that way you know what's going on here. So, and just to keep you in mind, like the second one and the fourth one are the R values. The first and the third are percentages. And so that would be 0.86%. So 0.86. All right, next one. June 3rd. I'm going to go to June 3rd. So right here. So that one would have been stopped out. So let's go ahead and do the short position here. Would have been short right here. So that would have been -1 at 0.11. So -1 at -0.11. And then the right one will be also a stop out, I believe. Yes. And so that would have been -1 at 0.13. So double duds. -0.13. All right, so now we got June 10th. See, there's some nice ones that we are missing, but that's okay. 10th. So right here. Is it right? June 10th. So here's our 10th one. And so here is our short position right here. And as you can see, like you have an extended period below the marker. That's by design. Excuse me. That is by design. So that's just something to keep in mind with that. So going right here, and so we would have held this all the way to here. So this big candle right here, that's where we would have, not all the way down, but right there. So it's 4.33. So 4.33. at 2.26. And then we'll do the next one over here, which is, so I'll just mute this. You guys get the idea, so I think I'll mute it for a while so you don't have to listen to my commentary. So this one's kind of interesting here because this stopped right at the marker. And so that will actually be counted as a take profit. So 2.18, 2.8 at 1.23%. 23%. All right, now June 11th, which I believe is just one day later. And so here's your, I think we said if there was one on the inside that we would do the inside. So that would have been stopped out. I think they would have been stopped out anyway. But we'll just take a look. And so that would have been your marker at minus 0.19. So minus 0.19 at minus 1. And then this one would have been, where's it at here? 11 at 12. So this would have been right here. So I think that would have been closed out as well. Well, this is interesting. Well, it would have been stopped out, I guess. So that would have been minus 1 at minus 0.72. Minus 0.72 and minus 1. So another double dud again, but you can see sometimes it doesn't matter. So July 4th, 2023, which is our Independence Day. So July 4th. Where's it at here? July 4th. So that would have been a great one. But it is what it is. See, that's the thing. I could cherry pick this and it would be a lot better. So that's see what I'm saying? So I don't do that, however. And so this would have been a break even, basically, because I would have gotten out of that buy. So we'll just do, that's pretty even. So I think I'll say 0 across the board. So 0 and 0. And then at the end of this, that would have been this one. So right before the July 5th. So you would have had this big short here. And so I would have held that. I would have held that as well. According to, I'm doing the Apex rules. And again, if you're unfamiliar, just go ahead and check my first video. But I explained it a little bit at the beginning too. So I would have gotten out right here. So right in the middle. So about 8.32 or 8.24, I'm sorry. So 8.24 and 1.39%. So 1.39%. All right, now we're going to July 21st. And you might say, like, all right, well, Otsu, this is last, this is only for this year's price action. Isn't that kind of cherry picking? And no, not really, because, well, first of all, this is only what TradingView will allow me to do. So if we go to the 5-minute chart, it's only going to give me the last probably 2 to 3 months. So keep that in mind. But the thing is like, how many of you actually traded 2022 with respect, right? Like I've been using my scripts to buy at January 1st since then, and I had people block me because how vocal I was about this very same script in my academy last year. Okay, and so I had people sign up and do things, and we ended up about 100 R um for those that 4 week period basically. I mean, it wasn't. I don't even think it was 4 weeks. I think it was like 3.5. And so I wanted to keep that in mind, right? Like I'm not cherry picking here because what, like I would ask, like look at the majority of people that had tried to trade this year and how profitable were they, right? So this shows real time scripts that have happened And so that's the idea. We're going to kind of compare the two with that. So, all right, let's go and on just a second. All right, so let's go ahead. July 21st. And just for future reference, if I pause for a couple seconds, just know that I'm going to be doing that off and on throughout the video. So July 21st. And so that would be right here. So that would have been roughly right here. So that would have been this big short here. So we got that. And then would I have gotten out there? I would have gotten out the very next candle, which again is a little more conservative in that regard. So it's going to be 3.31 at 1.07%. And then the right one will be probably a stop or something. Yeah, I would have stopped out in the middle. So minus 0.13. So minus 0.13 at minus 0.5. And then hold on a second. Last but not least is September 9th. Just checking the charts really quick. So September 9th. So we're going to travel a little more in the future here, or present day. Excuse me. All right, so we got right here. And see, I missed that big one, so that's all right, I guess. So that would have been a stop out 0.18. So minus 0.18 at minus 1. And then on the other side, probably wouldn't have been substantial, whatever it's going to be. So, and I don't see a divergence of any kind. So I would have stopped out at the buy signal here and just do half. So 0.075. So minus 0.075 at minus 0.5. So this is the data that we got to work with. I'm going to pause it for a second, and then we'll take a look at this data. All right, so taking a look at these 10 dates, I went ahead and did some math too on my notebooks, things like that. Let's stylize this just a little bit better. There we go. So we can see here that the percentages for the 15-minute chart on the left-hand side was 5.15% before leverage applies. On the right side, it was 5.895% before the leverage was applied. Now, total, that's about 11.04%. And then if you do your 25%, leverage, that would have been about 276%. If you went ahead and did that I don't think any particular trades were over 100x leverage. So, I mean, if you times that by 4, then you're looking at about 1100%. And so 1104% at 100x. And so just keep that in mind. Like, it is 100x. So that can be problematic for some people, and I'm not saying that you should do that, but that is the performance that I got. So based off of those 10 trades for the 15-minute, or the 20 trades, I'm sorry, it would have netted you 1104%. So it's sorry, just writing my notes more down. Down more, I should say. So with the R values, however, this is why I do performance and R values, is because you can kind of compare them at the same time. Because sometimes you can get better R values and not get good percentages, and vice versa. So with R values, you got 22.54 on the left side, 23.29 on the right side, and that would have gave you about 45.83 R. So we'll do 45.83 on my calculator. Divide that by 20, and you're looking at a average of 2.29 R per trade. And so that is very significant. That's pretty good from most of my correlative data across other people's charts and assets, scripts, things like that, that is above average. And so, but that's not something I'm going to sit here and tell you it's the best thing ever per se either. I'm giving you the data to work with, right? And so we'll do, we're going to go ahead and type this in. So 45.83R. And so that's, 2.29R per trade. And so that gives us a total. And so with performances, that would be, was it 276 at 25x? And then that would have been 1104 at 100x. So we'll just keep that in mind. We'll take a look at that and correlate that data. And so what I want to do is I actually want to continue to do this, and then we're going to start doing the 5-minute chart. So what I'm going to do is I'm going to take a small break, maybe 2 to 5 minutes, and then we'll go ahead and do these other dates. And then I think I'm just going to go ahead and do the randomizing right now. Actually, you know what? I'll do it after the break because I got to calculate the new what trading view would allow me to do. So taking a break now, and we'll do it again on the 5-minute chart. But so far, 1100% at 45R is pretty good. So, all right, taking a break, and we'll continue after this. I'm gonna go ahead and put the chart up as well, so that way you get some visuals. All right, so I am back, and I almost regret taking a break because now I'm really tired. It's like an hour before my bedtime, maybe. So, all right, so let's go ahead and do this. So we're gonna go to the 5-minute chart. You can see the scripts are kind of jumbled up. What I'm gonna do is I'm gonna scroll as far as I can, and it looks like September 4th is what we're gonna work with. So again, so September, October, November, so about 2.5 months. That's just what I got to work with for this back test, and so that's something I wish that was longer, but at the same time, excuse me, I think there's enough scripts here because you got some that are jumbled, some that are not. We're going to try to work with this and see, what we can do. So I'm going to go ahead and randomize this. And so we're going to start with September 4th. And we'll do 10 dates. We're going to go back, get 10 dates at September 4th, 2023. And then we're going to keep this at November 15th. And so I'm doing it as most transparent as I possibly can. Doing the American format. And then we're going to do get dates. And so those are the dates that we're going to work with. So, and just to give you an idea, like this is not cherry picked data. So I'm going to do it one more time just to make sure. And then that's what we got to work with. So first thing is going to be just a second. Sorry. I think I had something playing in the background. So September 9th is going to be the first one that we're going to look at. And so this will be right here. And so, no, it's not. I'm sorry. It's September 8th. I think I was too excited about that one. So just a second. Sorry, I'm having some technical difficulties with my headset. So apologize for that. So September 9th. And so this is, we're going to do the first one right here. I think I said that if there was a script that we would do the first one. And so that would be like so. That's pretty much a stop out. So we're right at break even, I guess. So 0, well, 0, 0, I guess. So we'll do 0 and 0. And so what I need to do also is to take these dates and play them right here. All right, so that's what we got to work with. And so I'm going to get these colored. And keep it going. So we're going to go to the right one now. So what we're going to do is go to the, actually at the end of it. So we go to the 10th. And then we look at the very, this is going to be this one, this buy signal that looks like it gets stopped out. And it will, yeah, so it's -1 at 0.05. So 0.05 at -1. So not good so far. All right, next one is going to be September 11th. So where's that here? 11th. So it's this buy signal right here. So that also gets stopped out. Not doing so hot. Especially when you got like a nice juicy one right next to it. It's kind of frustrating. So that would have gotten stopped out for -1 at 0.10. So -0.10 at -1. And then I'm going to do this right one, and then I'm going to do these sums. I forgot about those. So where's that here? Going to the marker here at 12. And so that would have been, let's just take a look at this here. That would have been stopped out as well. So -1 at 0.7. So -0.07 at -1. So now I'm going to pause while I kind of do the sum stuff. So, all right, kind of let me do it automatically. So I'm not a good Google Sheets guy, so apologies. So next one is September 21st. All right, so we're going to go there, September. The market's kind of going up and down. 21st, did I say that? 21st, yeah. All right, so first trade here on the inside. It's a short position. And so that's stopped out at 0.5. So minus 0.05 at -1. So we're not doing very good so far. Hopefully this changes. If not, that's completely okay. It's just, it doesn't have to always be good on every time frame, right? So I'm just saying that make me feel better, I guess. So going to the end of the, because you got good positions here. And so one thing that you could do is, if it correlates to market conditions, because this is right around the same time the American stock market's open, that could be usable. Maybe I'll do a back test in regards to that and see how that favors for some of you. So going here for the 22nd. And so this would be right here. And so that probably would have been stopped out. It would have been stopped out anyway. So, or hold on a second. Would have had the divergence. Yes. Would have got the divergence before we got stopped out. So we got kind of looked out on that one. So 1.73 R for this one. 0.73. And then 0.09 for the profit. So, and this is going to be small, but mind you, this is going to be increased leverage because this is like super, super low. So keep that in mind. Like you're probably not even going to be trading this without high leverage on low time frames anyway. So keeping that in mind. So September 24th is the next one. September, I think I will do a stock market open one. I think that would be nice. So what did I say? September 24th. Yeah. Where are we at here? So September 24th. Man, we missed some good ones, but that's okay. So long right here. That would have been divergence, actually. So right there. So 0.04 profits at 1.1. So 0.04 at, what did I say? 1.1. All right, and then we'll go to the next one, which will be at the end, closer to the 25 marker. So that would have been this one right here. And then, dang it, we would have got out there. It sucks. Could have got that divergence as well. But we're just going to do right here. So we got 12.46 at 9.6. So 12.46 at 0.96. So, all right, we're on the upside. So October 1st is the next one. So let's go here. I think I will do a trading one for stock market, because usually when you get that kind of up and rolling, it works. So maybe I'll do that next. So let's do October 1st. Right here. Right, so that's that short position that gets stopped out. So 0.9 at -1. Minus 0.09 at -1. All right, and then we'll go, where's the October 2nd one? Right here. Oh, that would have got us stopped out. That sucks. Looks like it's actually a misfire. What would be... Yeah, it got rejected. So -1 at 0.5. So that would have been 5 -1. October 17th. Here we go. October 17th. Short up. Stopped out halfway through, so that'd be 0.02. So -0.2 at -0.5. Or no, I'm sorry, -5. And then we're going to go to the opposite. So where's the 18 marker? And go like so. So we would have got out here, I think. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12. So yeah, that would have been the divergence here, at the very, really at the very bottom. I don't mean to say that, but right there. So 2.46. 2.46 at 0.39%. All right, so total, I mean, we're in profitable percentages now and R values. So it takes a while to get there, but we got there, and we'll see how that goes. So October 22nd is the next one. And so here's your first trade. Looks like it's going to be a stop out. Yeah, stop out -1 at -0.9. So -0.09, -1. This one's a little unfortunate. We do stop in profit, but we had a drop down, so 1.4 at 1.4. So 1.4 at 0.14. So profit, but um, not as much as we would like. So just a second, please. All right, November 10th, 2023. November 10th. So again, this would have been another divergence. Like I'm telling you, like these small divergences, they do save you. So 1.22 at 1.8. So 1.22. So it does help you. So going on to the next one. So where's the 11th? And then we'll backtrack one. All right, so this would have stopped out about 80% of the way through. So that would have been minus 0.8 or minus, yeah, 0.8 on the R value. And then what's 40 divided by 8? I can't even think of it right now. 5. So 0.35 minus 0.35. All right, and so on to November 12th. So we got November 12th and 13th. So this one looked like it would have stopped out about 75% of the way through. So we're just going to go ahead and use that as a reference. So minus 0.56 times 0.75 is minus 4.2. So minus 0.42. And then we'll do, oh yeah, minus 0.75. And so getting kind of negative over here, but we'll see. So we'll see how this adds up overall. And so we'll do, where am I at here? All right, we're going to go to the 13th and go back one trade to get to the opposite end, just to be consistent here. One thing I've also noticed too is that the higher the time frame, the more that comparison of the left right actually works in favor. And so I don't know if that's because of opening or closing trades, anything like that. I don't know how that works that way, but I am interested to look at stock-based openings and see if there's correlations. And maybe I'll do that for Bitcoin and a stock or like S&P or something like that. So we will see. And so there's no no divergence here, but is there the RSI? There is not. So unfortunately. So we'll stop right here about break even. We'll just say break even. So One last trade here. So November 13th. So this one's interesting because it's got like a double buy. So we're just going to hold that position and just see what happens here. And so no divergence. See, this sucks because this wouldn't have, probably wouldn't have triggered anyway. So this would have been pretty up there, right? So, but we have the sell signal here, so we got to work with that. So 0.88R. So 0.88R at point, a very mediocre 0.10. And then last and maybe least, we'll see, is this signal right here. And it's definitely not least, looks like. So short position. And so if it doesn't show like this, usually it's just open to close. And so it works like so. And then you have, looks like there's no RSI divergence, but we did. So my rule is if it's at 25, it would get stopped out. So we'll see. It doesn't really. It's 2507. I mean, it's probably close enough that I would have done that, to be honest with you. So, well, maybe let's see. But if I didn't do that, then I would have stopped out here anyway. So let's just, you know what? I'll give you all the conservative one. How's that? So that would have been a very long trade. Actually, you know what? I would have done the divergence. That's right. So divergence, because that's not a divergence, but this one is. So I would have got 18.43, which is a whopping, just a monster. 18.4. That's more than the rest of it altogether. And then at 1.51. So that was a monster trade. So what I'm going to do is I'm going to do a small, I'm going to pause my mic, do the statistics, and then we'll give a summary together. All right, so statistics show that we had, so performance wise, without leverage, which isn't really possible on these low time frames unless you just did a 1x, would have only been 1.94%. However, if we upscale this for the, like 100x leverage, for example, then you would get about 194%. Now, that's much lower than the 15-minute chart that would have gave us 1,104%. So as you can see, the performance for the 15-hour was 10 times the 5-minute chart, or the 15-minute, yeah, the 15-minute analysis was roughly, no, that's not 10 times higher. Let's see here. Sorry, should have had all this compared. So 194. So it would have been 5.7%. So roughly about 6% or 6 times better performance on the 15-minute chart than on the 5-minute chart. And so I can tell you that based off of that, I mean, 194% is still pretty good compared to the rest of them. So on the 1 day back test, so it didn't beat out the 1 day back test. So if you're trading on 5-minute chart, the 1 day performance will do better. Now that's also a back test for the past 6 years. So just keep that in mind. What this is basically saying, theoretically, if you do 20 trades on the 5-minute chart, so let's just say one 5-minute chart trade over every day for the past 20 days, you're probably going to roughly get about that 194 percentile. And so it did not out it the 1 day did outbeat the 5 minutes, so just keep that in mind. But it still did beat out everything else. And so with the 15-minute chart, actually blew everything away. So that's something to keep in mind with that. Now, I'm going to and so that would have equaled to about 48.5% if you would have did 25x. And so just keep that in mind because your performance will vary depending on how much risk you want to apply. And so going to the R values, however, we did a negative 32 on the left side, but a whopping 32.68 on the right side. Now, we also know that half of that roughly was one trade. And so um, I'm not necessarily concerned about that because that should still be relative based off of the Monte Carlo system. And so if you ran this test again, you should theoretically still get the same results. And so that ends up being a total with the other side about 30.63 R for 20 trades. And so let's do the math on this. It's 20.63 divided by 20. So that ends up about 1.53 R per trade. Now, and the reason I want to emphasize that I don't think that 18R is an anomaly is because this one, for the 5 minute, we averaged 1.53 R per trade. On the 15-minute chart, we averaged, just in this video, 2.29 R per trade. And so let me go ahead and add all these together because this will actually show you some interesting data points. So what we're going to do is we're going to do the average trade, which is 1.53 on the 5 minute, and then we're going to add the 2.29 on the 15 minute. So we're going to combine that with the results summary for the rest of these back tests. And so this is, it's right here, I'm sorry. So the 1 day per trade average, so for the 1 day, it's going to be 2.1. And then for the average 12-hour trade, it's going to be plus 0.34. It's interesting that the 12-hour trade was so lacking. That's by far the worst time frame, and that honestly surprises me. I thought the 12-hour would have been done better, but that's okay. So the average 4-hour trade would have been plus 0.63, and then the average 1-hour trade would have been plus 1.29. And so now we have an end result of about 8.18. So we're going to take the 1, 2, 3. So we had 4 time frames here, plus the 2 that we did. So that's going to be divided by 6. So right now we have 8.18 R across the board. Divide that by 6. And then you have that 1.36. And so that almost equals the performance for the 5 minutes. So that's why I don't think that was an anomaly, because it matches the average for all the time frames. And so this is why I like Monte Carlo so much, because you don't need to test thousands and thousands and thousands of trades. You can do random sampling here and there as long as the sampling is consistent as far as like equal number of trades, for example, and being fair with the dates. You should have a rounded average. And the thing is, the more time frames that we do, the more trades that we do, this should actually be more accurate instead of less accurate. And it's not less accurate necessarily even. The thing is, that's just how the Monte Carlo system works. It'll fine tune the approach the more that we do this, right? So 1.36 is the average among all 6 of these, right? And so that's something to keep in mind. And so we can also do the same thing with the performances, honestly. And so we can take that into consideration another time because I think there's other variables, but you get the idea, right? So overall, pretty healthy. I'm pretty satisfied with these results, but let me know what you think about this. Do you think this was fair? Do you think it wasn't fair enough? What would you like to see? I think I'll probably end the Bitcoin testing for the Apex and then go on to Ethereum and then go on to some random alts. But I think I will also do a second back test where I analyze Bitcoin and the stock market during the stocks open. I think that's worth a little bit of an experiment because I know a lot of you guys that trade on lower time frames do trade alongside the S&P 500 and Nasdaq or whatever. So I think I will take a look at that and see. I think that'll be a pretty fun experiment. But anyway, let me know what you think. Are you happy with these results? If you're happy, why don't you give my script a shot and take a look and see what you think. So anyway, that's the video. That's the back test number 4. And I'll see you next time. Thank you for watching.